Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 379 on June the 13th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Aurora Cannabis, Riot Platforms, and the VanEck Junior Gold Miners ETF. And we discuss three new trades on BlackBerry, AT&T Inc., and Bank of America. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the stock market finished the week lower. The news cycle has been pretty rich this week, obviously. The Dow Jones Industrial Average lost 565 points, closing at 42,197 points today. The S&P 500 index lost 23 points, ending the week at 5,976 points. And now it's time for the topic of the week. The topic of the week is leading with your strengths. For years and years, the self-development industry was focused on improvement. Find your weaknesses. Be strong enough to identify them. Spend all of your efforts to make your weaknesses your strengths or get them at least stronger. Well, there's been quite a shift in the past few years where people no longer focus on improving their weaknesses. Rather, they go all in on their strengths. I like this a lot more, actually. Rather than focusing on your weakness, you can become even stronger in the areas that you have an advantage in. It certainly does not imply that you're ignoring your weaknesses, but you can always try to delegate those away or find some other way to manage them. When it comes to trading, I learned a long time ago that it's hard to truly be an expert in everything and every strategy. If there are areas that you have strength in, hone in on those. If you always seem to make money with a particular strategy like covered calls or debit spreads or credit spreads, put your efforts there. If you find that you have a knack for making money in specific industries like pharmaceuticals or oil companies or banks, whatever, focus there. I heard a great quote recently when something like this: if you're right-handed, don't punch with your left hand. That seems like simple enough advice, yet sometimes we find ourselves using our weaker hand rather than our strong hand. So figure out what you're good at and become even better at it. So that's it for the topic of the week. Let's go ahead and dive into the trading review from last week's trades. We're going to start off with our covered call on Aurora Cannabis Inc., symbol A as in Alpha, C as in Charlie, B as in Bravo. At the time, the stock was trading for $5.72 per share. I looked at buying stock and selling the June 6 call at 35 cents, hoping for a return of 11% in 2 weeks. Well, shares of Aurora Cannabis picked up 13 cents, ending the week at $5.85 per share. The call option we sold gained 10 cents, leaving us with a net gain on the week of 3 cents if we were to close the trade out immediately. Now, the share price is still above our break-even point, and the stock has risen. That means the economics of the trade have not moved against us, so there's really no need to make an adjustment. This trade expires in the next 5 days. If stock increases 15 more cents this week, the entire trade will close in the money, which is great. If not, you keep the stock. You actually get to keep the money that you received for selling that call option, and of course, you still keep the stock. And if you do keep the stock on any of these cover calls, you definitely look to sell another call option in the next month just to increase your overall earnings from this trade. And remember that increasing the money you take in also reduces the amount of risk that you have on the trade. So just remember, over the next 5 days, you got to keep track of the stock. It's important to have a plan in case the stock moves lower, but so far so good. Next up, we have a credit spread on Riot Platforms, symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. At the time, the stock was trading for $9.85 per share. I looked at selling the June 9.5/9 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Well, shares of Riot Platforms lost 13 cents, closing the week at $9.72 per share. The out-of-the-money put spread that we sold is still out of the money, even though the stock finished a bit lower on the week. So we're still 39 cents above our break-even point, and we have only 5 days left before expiration. So if you feel like the stock is likely to head lower, you can look to close the trade outright. You could look to sell a call spread against it and create an iron condor, or you could even roll the strikes to the next month. As long as the stock price is above the break-even point, I'm simply going to be patient and see how the next few days affect the stock price. So no adjustments are required at this point, but once again, with expiration so close, you definitely want to manage the risk on this trade. And then our last trade from last week was a debit spread on the VanEck Junior Gold Miners ETF. Symbol G as in golf, D as in Delta, X as in X-ray, J as in Juliet. At the time, the stock was trading for $69 per share. I looked at buying the June 68.69 call spread for 61 cents. That could give us a maximum gain of 39 cents or a 63.93% return in 2 weeks. Well, shares of the GDXJ ETF gained $2.23 per share. That's huge, ending the week at $71.23 per share. The in-the-money call spread that we bought is now even more in the money, and the stock price jumped higher, and we're sitting pretty for the trade so far. Now, there's no need to make any adjustments at this point. This trade is moving in the right direction, and it expires in 5 days, so no adjustments are needed. You'll definitely want to keep track of the price over the coming days and be ready to make an adjustment if things seem to be moving against you. Now, fingers crossed, good trades so far. Some of the news that's going on, specifically war, will definitely or certainly can have an effect on the price of gold. So be ready to make a move if you need, whether that's closing the trade or however you end up playing it out. But hopefully, with 5 days left, we're going to walk this one out with a profit as well. So that's it for the review of last week's trades. This upcoming Friday, June the 20th, is expiration for all June monthly options. And all of the new trades on today's show will use the July 18th expiration for monthly options in July. Be aware that many of these companies will start posting the half strikes, like the 50-cent strikes, on Monday. So you might be able to find better price trades with less risk on Monday. Let's go ahead and dive in with the covered call on BlackBerry. Symbol B as in Bravo, B as in Bravo. Stock ended the week at $4.08 per share. I'm looking at buying that stock and selling the July 4.5 call at 22 cents, hoping for a return of 15.69% in 5 weeks. Now you enter this trade by buying stock for $4.08 per share and selling the July 4.5 call at 22 cents. This trade makes the most money if stock prices finish above $4.50 per share. The break-even price on this trade is $3.86. In real terms, that stock purchase will require $408, and you'll collect $22 just for selling the option. Next up, we have a credit spread on AT&T Inc., symbol T as in Tango. The stock ended the week at $28.16 per share. I'm looking at selling the July 28-27 put spread at 35 cents. That could give us a maximum possible loss of 65 cents per spread. Now you enter this trade by selling the July 28 put at 78 cents and concurrently buying the July 27 put for 43 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $28 per share. The break-even price on this trade is $27.65 per share. In real terms, you'll receive $35 per spread that you sell and have $65 at risk. And our final trade on the week is going to be a debit spread on Bank of America, symbol B as in Bravo, A as in Alpha, C as in Charlie. Stock ended the week at $44.09 per share. I'm looking at buying the July 43-44 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that would be a 53.85% return on capital in 5 weeks. Now you enter this trade by buying the July 43 call for $2.36 and concurrently selling the July 44 call at $1.71. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $44 per share. The break-even price on this trade is $43.65 per share, of course. And in real terms, you'll pay $65 to enter the spread, and your maximum gain is going to be $35 per spread. So that's it for all of the trades on this week's show. I know we kind of pushed right through them. I'm actually on the road. I'm outside of New York City right now recording this in a hotel in Tarrytown. So it's a little later than normal for me. So I'm going to hit the sack soon, but I wanted to make sure I got this out to you guys before going to bed. I wanted to make sure I got it done while I was on the road. So you guys are important. You mean a lot to me. Thank you for the letters I get, the emails. If I missed one, my bad. I'm sorry. It does take me a little time to respond sometimes, but I typically do respond. So if you don't get a response from me, feel free to email me again because I do read them myself. I don't let my assistant handle that. So thank you for the emails. Thank you for listening. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.